Good afternoon and welcome to this weekly market update from MRC Markets. Today is the 21st of June 2013. What we'll do today is go through some technical analysis on Euro dollar, cable dollar, yen, dollar Swiss, Aussie dollar, Euro sterling and gold. We'll not make any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website at www.mrcmarkets.com. For any new followers out there, we have 3 moving averages in each of these charts. The red one is a 50 simple moving average, the purple is 100 simple moving average, and the gold is a 200 simple moving average. Okay, let's have a look at the euro dollar. So basically, sorry, just one other thing. Obviously this is the Friday. We normally do these earlier in the week to give some sort of outlook, but I thought there's been some interesting moves going on this week, so I thought I'd do it on the Friday. To basically just review what's been going on, and yeah, I mean, if you've been struggling this week, then hopefully this will help you be better next week. But yeah, I mean, there's quite a few interesting setups starting to emerge on a few of these major pairs, basically because of the sell-offs that we had on Wednesday, was it? When the FOMC, it was Wednesday the 19th, when Bernanke came out and said that basically is hinting of the tapering of the asset purchases, which meant that the US dollar has been very strong since then. So that was out at 7 PM GMT on Wednesday. And as you can see on this euro dollar daily chart, these last 3 daily candles have been very bearish indeed. Some will say it's just a retracement, but I mean, euro dollar has been due a retracement, I think. I mean, we tweeted it a few times on the Twitter account, the @MRC_markets Twitter account, and it's finally come. So that was basically the catalyst, I think, for the overdue retracement. And now I think what you'll get on this euro dollar chart, I mean, so first of all, sorry, we got, I mean, that isn't really, it hasn't really playing that technically off that fib. I mean, initially it came in the 50%. Sellers came in and brought it back up and sort of have taken this fib out of play. So in my opinion, I think the longs are still in control here on this euro dollar. And now what we've got emerged here is this fib, which is pretty much sitting on it as we speak, at the 50%. I mean, you have to be cautious because the previous sort of swing, which would have been this one, I mean, bearing in mind euro dollar likes to 50%, that's why I personally look at it, didn't really come off of a fib that technically. But I mean, if you go back through the charts here, so let's just go to the left here, this one here, straight off of a 50%, a sort of solid up move here, not much zigging around, and then solid retracement. That was 3 candles actually. So kind of similar to this current one, off the 50%, ripped higher. And then what about this dip here? That was off of 61.8. If we scroll back down here, use that high there, pretty much off the 50%. So the euro dollar does like the 50% in my opinion. So anyway, I mean, this is the recent swing. So I mean, yes, it doesn't have to come off the 50%, of course. It comes to 61.8 or the 78.6, but bear in mind we've got quite a few moving averages here in between this 50% and 61.8% zone. So I would not be surprised to see a lot of buyers coming in at this 50% zone with stops maybe behind the 61.8, or you got the 100 day moving average bang on this 61.8 here, literally right on this line. And also bear in mind this 50% levels on a pretty much a round number as well. The one spot 3102 level. So I just need to move this, correct this high actually. Just a minute. Yeah, so pretty much bang on it at the minute. And you can already see buyers have started to come in. You can see the lower wick there. So we'll not be surprised to see this rotate high. We did initially, if you draw a 38.2 on it, we initially got, and this has also coincided with the previous highs around here. We tweeted this on the MRC Twitter account. We initially got a little bounce off of here, and I tweeted, I would not be surprised to see it. I mean, that's why I don't personally use the 38.2, because you tend to get weaker bounces in my opinion. And then you get a little bounce there, it comes back down to the more healthier retracement level at, for example, the 50% or the 61.8, and that's exactly what it's done here. So this is how I've got my chart set up on the euro dollar. It's all about this fib for me, what happens there. You can see the previous, if you flip it to the 4 hour, that 4 hour candle closed quite bearish actually, but so we'll be surprised to see it come down, maybe pierce it and then rotate high. Of course it could keep on coming back down and break lower, but I think it's quite hard to play for rotation high in my opinion. Also it coincides with the previous spike there, so but that's no surprise because it's bang on the 131 handle, so interesting level. That'll be interesting to see what happens going into next week there, if we have like a gap on the weekend or what have you, but definitely the daily close tonight will be very interesting. I think if we close above, then I think the odds for next week will be to rotate higher into these 134s. Cable is doing a similar sort of thing. Of course you've got this fib here, so similar to euro, we bounced off that 50% to the pip, sold back down. It didn't break these lows there, it came back up, we closed above the 50%, it actually tested it again, but it's closed higher, so in my opinion the bulls are technically in play. Of course it's been selling off this week, but some would just say it's just a catalyst for the retracement, and bam, we're testing this 50% to pretty much to the pip. We actually pierced it a bit, come back up. It's 50-day moving average on here as well, so an extra sort of confirmation there that people will be using to get in long. We'll not be surprised to see quite a few people long on this one, but I personally would be worried that the previous swing long wasn't a 50%. So I mean, you could draw a trend line. Is another sort of way to look at it. Bear me 2 seconds. So I mean, if you draw a trend line there, some may say it is looking to come back down, maybe to test the 78.6 again like it did there, but that 50-day moving average does tend to act quite well, especially as it's bang on a fib as well. But of course the daily close will be very interesting tonight if we close above, and then I think the odds will be for rotation higher next week. But yeah, the daily close really is key, and in terms of the 4 hours, the same sort of thing really. But funny enough, we've got this 200 simple moving average here on this 4 hour chart, which has supported it. So another sort of bit of confluence there. Really interesting chart, this one. Very similar to Euro. 2 interesting potential setups there that really could indicate where the market is going to go for next week. I mean, yeah, in terms of what's happened this week, if you look at the sort of 1 hour chart, it really has just been sort of selling the dips really. This one sold off quite nicely. If you look at a fib there, pretty much just below the 61.8, and you had the moving averages that sold off. If you look at the 1 hour on this one, that wasn't a fib, that would probably be a 38.2. But yeah, it's just been selling the dips really. After that FOMC, you can see this was the FOMC candle here. Then it slowly chopped down, then you got a little bit of retracement upwards, and the 50 SMA capped it. So nice and technical there. When you get aggressive moves like that, you do normally tend to get another leg down. And that's exactly what's happened there on the cable. So really technical there. Let's have a look at the dollar yen chart. Dollar yen this week has just been slowly grinding higher really. Looks to me like a retracement for sellers going to come in and sell this. The price action to me looks very, I think looks quite bearish to us. You've got a lot of upper wicks here. The previous candle upper wick, 100-day moving average here as well. I wouldn't be surprised to still see it grind higher though to maybe this 50% or up to the 50-day moving average here. But of course, if it closes below here and forms a bearish candle, I would not be surprised to see it sell off next week at all. I mean, you got to realise this has been a long uptrend, and in my opinion, I think it's just been due serious retracement. Look at the weekly chart as well. It has been very, very bullish, but of course, it can still continue to rotate higher. I think if you draw this fib from lows to highs here and add at 38.2. And that's where a lot of dip buyers have come in there. The 93.57 level, previous support as well. Let's see a bit better on the weekly actually. Previous support here, candle wicks piercing it, and the buyers have come in, but you got to realise we're a long way away from moving averages here, so we'd not be surprised at all to see sellers come back in and bring us back down to a more healthy retracement level, maybe the 50% or the 61.8. But yeah, that's the only thing I'm really focused on dolly yen chart. So of course you've got that big fib, and then this fib from the highs to the lows, and that's how I'll personally be looking at it. And in fact, I think if you had a 38.2 on there, I wouldn't be surprised to see it coinciding with this 100-day moving average here. Surprise, surprise, right where we are now. So a nice confidence there. Sellers have spotted that 100-day moving average and 38.2% retracement and are coming in as we speak, forming these upper wicks. So the daily close will be really, really interesting there. Close below, wouldn't be surprised to see it sell off next week. Dollar Swiss, quite a messy chart if you overall look at this whole daily chart. But opposite to Euro, really, I mean, Euro is obviously an uptrend, it started to retrace. Dollar Swiss hasn't been doing it as much, and it has gone up quite a bit today. But I still think it's got a lot more room to the upside. I mean, you see it's been getting captured at the 200-day moving average. But more healthy retracement will definitely be further up here, maybe. I'll just take this 38.2 off now. More healthier level definitely is 50%. Of course, you've got the moving averages just below it though, so if we do get higher, then keep an eye on them, see what happens, what daily candlestick patterns form at these moving averages. But currently it's trying to close above the 200-day moving average, so if we close above that, then we would not be surprised to see it rotate higher to this 100-day moving average will be the first sort of target really. 4-hour chart, in fact the 1 hour has been quite interesting. This looks like a blatantly obvious fib that happened this week, pretty much off the 61.8. A nice little cluster of moving averages here. So you had the 100-day, those are the 100 SMA and the 200 SMA here. Nice bit of confluence there, and we rotated higher, and we're now testing the highs off of this fib move. So that's been quite interesting on sort of the 1 hour, 4 hour chart. Also the 4 hour there, that same fib move had the 50 SMA coinciding there. Nice little candle wicks off of that, nice bit of confluence, small little move there. That would have played out during the middle of the week, and that's played out quite nicely really. The last couple of days actually, sorry. Aussie dollar's just been really aggressively selling off, especially off the FOMC as well, because that of course brought a lot of strength to the US dollar. But of course Aussie has an interesting sort of correlation with the stock markets as well. So it's weak for stocks, and of course it's weak for the Aussie dollar. So a weak Aussie dollar and a strong US dollar equal a very bearish Aussie US pair here, and that is what's happened the last few days. Really has sold off. The 4 hours quite interesting. You had a nice lot of sellers were coming in at this level here. The sort of the 50%, 61.8% range, selling that bounce and bringing it lower. But in terms of the sort of longer term charts, the daily is just sell, so we're at lows here. I mean, you'd be very brave to keep on selling at these lows. Personally look for some sort of retracement. So this would be the dip that I'd probably personally look at first. Oops. Let's do it again. This would be a dip. I wouldn't be surprised if, let's say, if it bottoms out here and it pops up on Monday or Tuesday, then I wouldn't be surprised to see sellers coming in at this 50% level here, which also coincides with, if you draw a resistance line here, with these lows here. So previous support could turn into resistance there just below that 50% level. But yeah, that's all I'm really focused on this Aussie dollar chart. Euro pound, you got a trendline support here which has been holding for quite some time now, and you can see a bit clearer on the weekly. I mean, some would bring it up a bit, some wouldn't. I mean, I suppose the correct way really would be leave it there. So it is technically still an uptrend in terms of the daily. The daily's been interesting in terms of fibs. You had this one move here from highs to lows. So let's just zoom in a bit here. Let's get rid of that trend line. Right, so the first move here was from the highs there to that low, so the swing high to the clear swing low, bang off that 50% and the 50 SMA, 50-day moving average, and we sold off, but it failed to make a daily candlestick close below the 0% here. You can see all these candlestick, sorry, it did actually close technically there, but it was a sort of fake out really. Got all these daily wicks piercing below and then kept on closing above, and then we eventually got back above. So a lot of fib players, what they do is they bring that previous high to the next one there. So that the previous swing high, they bring it from where we bounced off, and you can see the 78.6 is holding off here. So a lot of sellers are obviously coming at that 78.6 level there, as you can see from the chart at the 85, 84s. But it's just been quite choppy really. This week has been very, very choppy. I mean, the last couple of days have been bearish, the previous few days have been bullish, but that setup is still in play. But of course, if you then look at the I mean, it's probably best to be looking at in terms of a pure resistance level really. Let's just make this line a little bit thicker. This has really just been a pure resistance level that's been holding, which was obviously a previous fib. So I mean, yes, you could say it's a 78.6, but the easiest way is more obvious just to say it's the 85, 83 is a clear resistance level there. And failure, if we get well, we haven't had a daily candlestick close above for a long time, but if you do get a daily candlestick close above, then it's all about looking at these highs here. But that is the key ceiling for the euro sterling at the minute, and those sellers will be looking for a break of this trend line here, in my opinion, this sort of wedge pattern, and then that first target will most probably be the 200-day moving average here. Yeah, I mean, that's pretty much it really in terms of the euro sterling chart. That's the way I'll personally be looking at it. Clearly, maybe that resistance level was very, very good there, and that trend line support has been holding as well. So it's all about this wedge. A break either side will be for momentum. I wouldn't be surprised to get some serious momentum either side of that wedge. That's the forex time. Let's have a look at the gold chart. Gold has just been really selling off, especially off that FOMC as well. Strong dollar. Everyone flocking stocks and gold here and piling all their money into cash. And gold has really, really suffered. We're now 1287 now. And in terms of, well, I mean, so let's keep on the daily. It's been quite clear. We spoke about this fib, which got sold off 50%, 1471. That got sold off very nicely. And then you're also having sellers coming in at this one here. So from that, where we sold off there at 50%, you use that as a next high, and then bring a low to the obvious swing low. You can see a very, very textbook level here, 50% at 1412, 97. Also coincided with the 50-day moving average here, and that sold off very aggressively. We broke the lows. FOMC broke those lows here, and we really are selling off. I mean, today's been a brief retracement, but it's looking very heavy. If we do get a bounce, I'd then move my high lower from where we bounced off from that previous fib and use these lows here. Let's say it does bottom out here. If we bounce up, then the 50% comes in at 1345, which also coincides with, surprise, surprise, these lows here. So previous support could turn into resistance here and cap gold if we do get a bounce up at 1345. So that's the key level I'll be looking out for gold next week if we get a little pop on this commodity. Okay, that is all for today's video. I hope you enjoyed that. I hope you found that useful as some sort of review for what's been going on, and interesting setups to look out for next week. I will do a video next week, may do another review one on like a Wednesday to give you an update during the week, just in case things have changed. So if some of those setups are starting to play out, or if we get big moves in the markets, then and if the charts look much different, then I'll do a video then. Yeah, that's all for today. Hope you have a great weekend, and I'll catch you next week. Thank you for listening.